good second deal for sure. With a result like that, which is, essentially like a 10x, multiple.
All right, we'll get rolling. Episode 20 of The Deal Ranch. Doug Root, managing partner and co-founder of Blackfin, real estate investors, and Ironfish Construction. Thanks for having me here in your office. I appreciate it.
Oh, that's great to have you here.
Really looking forward to hearing about your journey, right, as an entrepreneur. We can start back in the tennis days, but do you want to give an intro on yourself and current role at the two companies you lead here?
Sure. So, to kind of give you a little backstory, my business partner, Andy Buchanan, and I started Blackfin a little over 7 years ago. Since then, we've bought close to, I want to say 14,000 units, maybe a little bit more at this stage. Current portfolio with recent closings this week and two more pending. The first couple of weeks of the new year will be a little over 11,000 units and almost a little over $2 billion of acquisition value on that portfolio. So we've had a slow to start, but we've been able to catch some momentum recently and continue to be pretty active today. And then about 12 months after, give or take, after starting Blackfin, we started a full-service general contracting business called Ironfish Construction. That business is now licensed and operable in 22 states, and we provide third-party renovation, deferred maintenance, CapEx projects. No ground up, just all unit renovations, base building work. We'll do exterior, siding replacements and, major clubhouse overhauls as well.
I love it. And that's with Tom Brady, as I've heard you say on a couple of
yeah, so
podcasts.
Andy and I have a business partner in that business. His name's Forrest Dalton. I respectfully call him the Tom Brady of the multifamily renovation space. Forrest is very adept at navigating existing asset issues, and also just has a really good expertise on the renovation space. So we're very lucky to have him as our partner.
That's awesome. Well, I appreciate Rick Schaub obviously coordinating this at Clarion, who's a fellow Deal Ranch guest a couple months back. So I'm glad he was able to make this introduction. So you've got an awesome entrepreneurial story. And as you said, only 7 years running this business, and you guys are moving around pretty well, to say the least. Let's kind of trickle back to college days. So you went to college at Duke. What'd you study? You played tennis, and then after school, it looks like you did a little stint on the professional tennis tour too, which is awesome.
Yeah, so I played a lot of tennis, and that was just a big part of my growing up, and just lessons learned. Right, it's teaches you a lot, and kind of going through it with my oldest seems to have taken to it.
Nice.
And starting to play some tournaments, and while very stressful to watch, it kind of makes me relive, why I enjoyed it so much. You're just out there, competing, all the time. You win, you lose, feels terrible to lose. And, you got to bounce back and get ready to compete again. And I think that's really honestly, what's drawn me to this space. I think, getting out of playing tennis full time, you kind of lose a little bit of like, what am I going to do, with my life, and how's it going to be, as exciting as what I was doing, where you have these like really, really high, points of your, of your day, and then really low when you lose. And everything was kind of, status quo, until I really, had the opportunity to, start working on transactions and then, most importantly, probably leading them, where you're on the front lines and you're seeing the success and you're seeing the failures, and you almost get a deal and then you don't. And it's very measurable, right? I think, there's not, there's certainly a lot of, careers like that, and, sales where you're winning and losing. But, this is one where, the highs are really high and the lows are low. And, I definitely, that excites me, right? And it, helps you, motivate to come back and go find another one. And I think that's really, what's been a big part of our story here is just wanting to go out there and compete every day. I think you could go out and be like, oh, we bought 5 deals this year, or that's great. Let's, we hit our budget. And to me, it's not necessarily like, oh, we're hitting the budget or beating the budget. It's like, let's go out and compete and, see where we can take it and have fun doing it, at the same time, which is, the most fun, for me is just going out there and competing for deals.
Yeah, absolutely. I love it. I think that's every athlete, especially you play a sport growing up, your whole life, and then you finish, you're like, what am I going to do now? It's like, how do I recreate this pressure in competitiveness through my career, which can be, super difficult for a lot of us to do. So when you finished playing tennis, what was the idea between going to Cornell to get your MBA, and did you already know you wanted to focus on real estate there? When did real estate come into your life?
Yeah, well, so kind of interesting, right? Like maybe many people, I don't know if I necessarily had a great plan. I got out. I actually landed a job at Prince, a big tennis manufacturing company, and landed a role as a project manager, which I basically got a job that I professionally didn't deserve, but from a tennis acumen standpoint, I was able to sit in front of the sales force and talk about the products better than anybody else because I knew them better and add credibility there. So what I didn't know about the business side of it, I was able to make up for in other ways, and it was a great learning experience. And I really enjoyed the space, but you start to realize you're like, hey, I'm a big fish in a small pond. Like, what else is out there? And just kind of, I wouldn't say on a whim, found my way, into the business school, process, right? And I think unlike some people, I was as you can tell by the names of our company, Blackfin and Ironfish, I like to fish, so I was assessing top schools near top quality fishing, right? And so
I love that.
Cornell being proximate to some great, salmon, steelhead, and trout fishing, became a natural fit that kept me, semi close to my family in New Jersey.
That's awesome.
But it was, I'd say I could tell you a fancy story of how I had this, very, methodical process and, going to business school. And by the time I got there, I really, I was, again, trying to figure out what that next step was. I was like, I know sports. Should I go work at Nike or go work at, one of the big, sports brands? And, a very good, still one of my best friends to date was, laser focused on real estate, right? It was, and at the time I also, had a couple direct lines on buying some tennis clubs. And so I was like, well, I can hang out with Dave and go to class with Dave. He likes real estate. Seems kind of interesting. And so I've started to gravitate towards real estate, through that friendship. At the same time, started to buy these tennis clubs, or tried to, and had relationships with the sellers and various, reasons they didn't work out.
Sure.
But it started to give me the bug, the real estate bug a little bit. And also, you got to eventually get a job. So you got to concoct a story, right? So I started to, really kind of, navigate my my path towards real estate at that time. So.
Wow. And then when you finish school, you right away go to Invesco. And then what was your role there, an acquisitions role?
Yeah, so I was very lucky to join Invesco. Not knowing, obviously, knew Invesco, studied up on Invesco. Landed a job there, but didn't realize, they had the street credibility that they did,
Sure.
just not being in the industry. And then all of a sudden you're at a, top 5 global asset manager and everybody will call you back. You're constantly getting to meet, major players in all sides of all product types and all, sides of the space. And so it gave me this really good, wide, breadth of experience. Right. And so I was landed in an acquisitions role, which was grind models all day, every day, put together investment committee packages. And, they're a very thorough shop, right? As institutional comes. So, you learn how to check every box, right? And how to run a deal. And so it was the ultimate training ground for, how to run a process, right? And so, you take those lessons and you apply them, your career thereafter, right? And so, not knowing what I was getting into, I wouldn't have done it any differently, right? Some people could say, I would have, gone somewhere else. Sure. To me, it was the perfect, start to my career to really fine tune the process and learn how the biggest players do it, right?
Yeah, absolutely. You can't really pick a better place to start learning. So you're there for a handful of years, 4 or 5 years. Then you transition to Greystar, you get a great role there. What kind of led you to that jump, and what did you kind of look to gain from the new role?
Yeah. So, I mean, so for me, it's like, you kind of want to be good at something, right? And, it's like playing tennis, right? Like, you can't just have a good serve. You need to be able to, do other things as well if you're gonna win.
Yep.
And we covered a lot of product types at Invesco, right? So we'd work on retail, industrial, office, multifamily, and we'd cover a lot of different geographies, right? And a lot of those markets they have different lingo for how rents are spoken about, right?
Yeah.
Between New York and DC. And so I always kind of felt like I was knew a little bit about a lot, but I didn't know my depth of knowledge, on any product type was not as strong as I wanted it to be, right? And having just fortunately, now as multifamily has become like the darling, right, of like the real estate space, I just gravitated towards it, right? It was like easy to relate to. I was a renter, right? I mean, it's just something that just made sense to me, like, probably for a lot of people. And happened to, land at Greystar, both shops being, two of the best in the business, at the perfect time where they had, really just, set course to grow the business to, epic proportions, right? So we just raised a big fund, and we were, in a very entrepreneurial fashion mandated to, go out and deploy that capital, find good deals. We can move quick, right time of the market, rents were growing. And we did a lot of deals. We, did some very large transactions, and learned how to run big deals and work on big deals and learned a ton, right? And worked with really great, smart people in a great environment. And so it was a really, really fun, time to be in the multifamily space, especially, as people like come ask questions like, oh, what's your career advice? I'm like, go somewhere where people were active, right? Yeah. And, where someone's, a group is trying to grow. And, that's exactly what was going on, right? And so we were doing, more deals than anyone and, raising more capital than anybody in the multi-exclusive space, right? And so it was just a great experience.
What size, what size deal, and then kind of what market, and when you got to Greystar, was it only apartments you were working on, obviously?
Yeah, so well, now they're
doing everything.
Yeah, they're kind of moved on to not just specialize in apartments, but that's all we were doing, right? Okay. And I wasn't doing development, so I was just very similar to what we do today. Maybe a little bit newer vintage product on average than what we buy, but you're buying value add multi, right? And so and covering a lot of the same geography. So it was it was exactly same. Like the next level of where you'd want to be, right, as a existing asset buyer.
What do you think in those two roles, right? You talked about like at Invesco, kind of more just at the office grinding, and then obviously evolving into a managing partner, managing director rather at Greystar. That's about 10 years of a good foundation of real estate. What was the hardest thing for you to learn? Was it like how long deals really take? Is it, closing a deal? Like what do you think was the hardest kind of learning curve or most difficult thing along the way? I
mean, there's just, from a acquisition standpoint, right? You don't know what you don't know until you come across it, right? Yeah. And just, really learning, all the, underwriting pitfalls, right? Yeah. And, I didn't have I didn't jump out of college and go straight to investment banking and just model all day, right? So I'm in the throes of trying to make sense of these deals and trying to figure out. I just was hitting tennis balls a lot, and then just all of a sudden trying to get the technical stuff down, out of school, and and just kind of getting that ramp up period and trying to really just digest it all, right? For me, the easier part was always the relationship side, and trying to put the pieces together, have a rapport with the seller and have and be able to talk to the equity, and so that was always like the natural piece, right? And so it was really just getting that foundation and like having enough reps to not step on a landmine, right?
Right.
It was really the goal, of all this, right? This is, we're fiduciaries and, we're always trying to do our best, but you want to make sure you have enough reps, right? So that you can avoid things that you don't know and be prepared for and think ahead for the ones that, may be out there.
Absolutely. So with this 10-year base under you, a great foundation, what led to starting Blackfin and how did you meet Andy? Like, what's the origin story? How long was the build up to like, all right, I guess we're going to quit our jobs and do this thing? Like, how did it evolve over time?
Yeah. So, sometimes, life evolves too, right? And so, but yeah, well, basically, lots of motivations, right? Out, working a lot, on the road a lot. And then you start thinking like, hey, like, I'm about to have, my second kid, right? And, I want to be able to control my destiny a little bit here. Now the world's different, I think, for people because you have a little bit different, like work-life balance because people are not in the office every day, right? Yeah. But at the time, it was more of a culture of like, you're in the office, you're grinding, you're, have less flexibility. And I was like, well, I need to create some of that flexibility. I had the luxury of having, parents that were entrepreneurs and they, they could control their day to day.
What did they do?
In like a small insurance consulting business, but, worked from home and, always had that, kind of life where they would be able to see my sports events and get me to practice. Right. I was like, I want that. Right. Yeah. And so if I can just make myself, even with my old situation, I want to try it, right? And you got a supportive wife who, has a good, stable career that's,
important.
That's helpful, right? Yeah. And that's a little less volatile, right? With the economy. She's a surgeon. So, you have that kind of steady, maybe a little different during COVID.
Sure.
But, and so you could take a chance, right? And so that was some of my motivation in the back of my mind and always kind of said, hey, like I have a mentor of mine, who would call it, putting things in your lifeboat, right? So that you could work autonomously. If somebody came in and said, hey, today's your last day, like, what are you going to do? Right. Yeah. And so he was, he's been a great sounding board for a lot of things, but that always stuck with me. So I was like, well, I want to be able to develop this skill set to be able to buy real estate because, one day if I can, try and fill my own lifeboat, right? So I can float on my own, I want to be able to do that. And so, so it's kind of I think he's happy I took his,
I bet he is.
his words of wisdom, farther than he probably thought I was going to. And, and then, simultaneously, I also kind of knew if I was going to do that, right, there's a lot of things I'm, good at, and there's a lot of things I'm not good at or don't have experience in. And I was, very focused on trying to find a partner that would complement those skills, right? Okay. To do anything of magnitude, right? Yeah. Could buy a small deal here and there, but to really scale it up. And, Andy and I had known each other a little bit just met at an industry event, stayed in touch, played golf here and there, have lunch, talk about the market, the way a lot of real estate people do. And, I was talking to him about, pursuing small deals, and he floated the idea of like, hey, would you ever do it on your own? I was like, I'm gonna do it on my own for sure, right? Like that's gonna happen. And he was like, well, we should talk about it. And so,
and was he in that same spot too, or?
Yeah, he was thinking about next steps, for his career. But I think, much like, different than me, he's like, well, how are we going to raise the capital? Where are we going to find the deals? He was not a, front lines deal person, right? So he has, ran a big DC based company called Kettler, was a CFO for a long time, was a CPA originally, started his career, in the tax world, right? Yeah. And so in accounting world. And so I was like, that's the guy I need, right? Like, somebody that, understands how a big company operates or even a small one. And there's a lot of nuances, and we're not just buying real estate deals here anymore, right? There's a lot of, HR components. There's a lot of, you got to pay people. There's payroll taxes. There's insurance. There's
it's a business.
There's a business, right? And we buy real estate, right? And there's a lot of treasury management that goes on, and responsibilities with that. So it was right time, right place, for both of us. And he's a guy of great character, and you want that too, right? Because it could be a long road if you don't find that.
Absolutely. Yeah. This episode of The Deal Ranch is brought to you by Reed's Jewelers. Reed's has been in business for 77 years. Since 1946, they have been devoted to customer service and quality. Visit Reed's for a large selection of fine Swiss timepieces from Omega, IWC, Breitling, Grand Seiko, Tudor, and Tag Heuer. With fast free shipping and 24-hour customer service, Reed's is the perfect gift for this holiday season and any moment you want to remember. Find a Reed's store near you or shop online at reeds.com. That's REEDS.com by clicking the link in the show notes. What was kind of the original hypothesis, so to speak, to the business, right? You guys wanted to buy, decent to large size multifamily properties, be owner operators. It's a hard business because there's a lot of people that can do it, so to speak. Like, did you kind of see your path of like, oh, I know for sure we can execute in this market or make money? Like, it's a really competitive space, obviously.
Yeah, I mean, I honestly, if I maybe I should have thought about it more. If I thought about it more, maybe I wouldn't have done it.
That's right.
Because I think I don't honestly. It's a great question, right? Because I look back and I'm like, man, I don't know if I'd want to, have all the stars align again so that we could get to where we are today, right? Because I know how hard it is to find a deal. Like right now, we have a track record, we have a platform, we have equity partners, we have access to capital. And when we started, we didn't have any of those things. And that's really hard, right? Yeah. We happened to get, an off-market look from a private seller early on, that a friend, industry friend who's a developer, got a call on. And he's like, we don't buy existing assets. Why don't you call my friend Doug, right? And so
was that the Glen Burnie deal?
Yeah.
How'd you guys structure that deal? Like, what was we don't have to dive super deep into capital stack, but did you have an equity partner lined up already for that deal, or did the deal come and you're like, oh, we got to raise money for this deal?
Well, the good part is we got the call on the deal, and unlike today where we've got a lot of stuff going on, it was me, Andy, 2 dogs in a windowless office, right? And so we got the call, and we could pretty much go tour it, that minute, and so we jumped on it right away. It sounded compelling. To be able to buy 200 units and not have a fully marketed process, where we get other people looking at it, but, a quieter look, right? It felt really interesting. And so we jumped on it, and then, we started the hunt for equity, right? And so that, fortunately came together, right? Again, we've had, really good relationships, and we had somebody, help make an introduction to us that we would have, never known about, right? And done multiple deals with them. And, again, right time, right place. They wanted to put equity out, and we had a deal.
Wow. What made that, this is a 2-part question, what made that the right deal to do? And what was your initial kind of yield requirement or exit strategy? Or cash flow requirement on a deal, because there's 1,000 deals to buy every day of the week. They're just too expensive, right? So what was your yield target on a deal, or what made you say, hey, yeah, this is for sure the deal. This is a good basis we should buy this. How'd you guys think about that?
Yeah. So, I think, at that point in time, that opportunity was unrenovated, nice. Private owner, didn't have the same, business strategy or desires that, we would to go roll up your sleeves, kind of take the asset to the next level. Market was healthy, high occupancies, rents, felt like, with some capital infusion into, exteriors and the units, right? You could close that gap in rents. And so, and those opportunities exist, right? If you're a private seller or you want to go write checks into a deal and, deal with a lot of renovation work all the time, not necessarily, right? And take the risk. And so, they were ready to move on. And we had the right relationship with the broker that was representing them, and we were able to pull it off, right? Wow. So it was it's a good day, right? but nothing's easy, and and it also it took a while to get there.
How long? That's what I was going to say. So you guys start. I saw there's actually a bunch of articles written about like 2 industry professionals start, and it's like, I was wondering when that article got put out, how long until you got that Calvert deal?
Yeah, so we had this great like headliner on like a front page, cover page of like Multi-Housing Executive, and we got the call like, hey, you guys want to be on the cover? And Andy and I looked at each other, and Andy's like, I don't know. We haven't done anything. And I don't know if we will. So we hadn't done anything. And, there's like, it was a good 6 to 8 months before we were awarded that deal. Right. Wow. And so, you get out and you're like, huge sense of euphoria, right? Like, oh yeah, I'm an entrepreneur, right? And then all of a sudden you like don't get a paycheck anymore, and you're like, oh great, now I'm just basically might as well just say I'm unemployed, right? So
100%.
And that fortunately, was the first of what was some slowly building momentum. We had another one right after that we had equity.
Presley?
No, we ended up not. It was a deal in Frederick, Maryland, that we had equity for with a business school, classmate of mine. Oh, we were ready to go, and because we had no track record really, right? Yeah. They picked another buyer, right? Damn. And I think we would have performed, right? We were ready to do it. Wow. Everything works out, right? But it was one of those like, we're gonna get 2 in a row, right?
Yeah, rip your heart out.
Yeah, and then you're like, well, there's back to the low, right?
That's right.
So
you get the first deal, obviously. That heard you actually say that before, and a lot of guys say it, right? The first one's the hardest one. After that, like, when did you feel like you started to pick up speed, and how did things start to change in the office? Two guys, 2 dogs, to now you have all of these people that work for you, and you go on the website, you see these guys and girls background that work here, great pedigrees, a lot of experience that work here, and it's like it just started with YouTube. When did you start to piece in people, and like what were those? I guess when did things you could tell start to really progress, and when were you like, oh, we gotta start hiring other people too? Yeah.
Well, you got to have some sort of like I don't know, call it some revenue, right? And you also need to have some trajectory where it might be okay down the road, right? You kind of do as much as you can,
sure,
until you run out of bandwidth. And so it's a good solid year before we really hired anyone, because it's like, well, just roll up our sleeves, we'll do the underwriting, we got one deal, we'll work on the asset management, Andy will cut the checks, and
cool.
Put his old, CFO, hat on, and
go to work,
and AP, and so we were just doing it, right? Like all of it, and then you start to have enough going on. You're like, okay, well, we need bandwidth, or we can't grow, or we won't be able to execute. But you want to make sure you're like, you have a path for people, right? And you're not like,
absolutely.
Hiring people and then, firing them, days later because you can't, substantiate, their existence.
Yeah.
So, but it takes a little while to get there, right? And, both businesses have grown, and, got a lot of people now, but it still feels like it's, in the early stages, right? Like
absolutely.
We've got I feel like we're, starting to barely scratching the surface of the opportunity out there. But we do have a phenomenal team that we've been able to get on board. So very happy and excited about that.
Absolutely. Well, so a year in, you're both wearing all these hats still. Why? How Iron Fish? Like, how did that come about? And like, that seems like such a confident maneuver to start another business, right? Another year in, but obviously you look at the marketplace right now, it gives a significant competitive advantage to be a value add buyer and have in-house construction. But how did that kind of come together for you guys only a year in?
Yeah. So, I mean, for us, one of the questions that kept coming up with equity partners was, how are you going to do the renovations? Like, how are you guys going to execute, right? Because, it's great. You found an awesome deal. You're nice guys. Like you've bought deals before and run assets, like, but how are you going to do all this CapEx work? And how do you know your budget's right? And so in our mind, we're always like, okay, we're going to go hire, project manager, right? Somebody can go level bids and, really, help narrow that lane for us. And, somebody we can point to and say, hey, Bob's over here and he can, he can execute for us, right? And so Forrest, our current partner, and I've been friends for a long time. He had done a lot of work for us while we were at Greystar. He would walk projects for us and, help us with CapEx budgets with the, kind of gentleman's agreement that, hey, if we buy this, you can do the, the renovation work for us, which, we still do a lot of that today, right? For all of our clients. And when I was asking Forrest, like, hey, who should we hire, right? I'm like, I can't afford you because, you've been, you're a 30-year veteran in this space, right? Like I need, 5-year veteran.
That's right.
He turned to me one day, he's like, how about me? And I was like, I can't afford you. And then I was like, I got an idea. I was like, do you think you can bring anybody with you? Right. Like, will anybody follow you, just so we can offset your cost? You come on board, help us grow this. And he was like, oh, I think, he's a pretty humble guy. I think a few clients might follow. And what really became apparent is like, we've got a lot of relationships, pride ourselves on, like just having friends in this industry. Right. And so then you get out and we start, doing some, third-party work for, forest relationships. And then we can make an intro because we're at dinner with an owner the night before, for some reason, right? And it kind of, as a result, kind of built on itself, right? It wasn't part of the initial, like, hey, I'm going to quit my job and I'm going to go start a construction company, right?
Right.
But what we could offer to Forest is help, leveraging a lot of Andy's, expertise running a big company and cash management, right? And then on the business development side. So it's like the, kind of perfect trifecta of like skills, right? And how we, can grow that business.
Yeah, it's super
But it's
powerful.
not an easy one either, right? No. I mean, construction of any sort's, complicated.
Yeah, it's just a tough business sector as a whole. So how do you... So kind of bringing it more to modern day, right? You go through the website and read all the articles. You guys have transacted so many deals, and we can talk about the Clarion deal that you guys did a couple years ago, which was massive to say the least. How do you evaluate different markets? I know you probably worked in most of these. I think you say from Massachusetts to Florida, probably at Greystar. But for you to put your own money into deals, like you have a lot in the Carolinas, around here, obviously too. But how do you evaluate a new market? There are a lot of cities in the Carolinas, and post-COVID, a lot of new markets became hyper-growth markets too. Yep. What are the big criteria for you and Andy to be like, oh, we want something here? Or is it a deal comes up, not necessarily do you justify buying it, but do you evaluate when something comes up in a new market? Like how do you evaluate buying deals in different geographies, so to speak?
Sure. I mean, they're changing all the time, right? I mean, it's kind of like, there's a market element, to our buying criteria. Then there's a, asset and like, story and operational like dislocation, point in time, where we are in the, capital markets. And then also, where is the actual cost basis, relative to, recent trades, peak values, right? Like how's the asset performing? What do we think, long-term, growth prospects are? And then what are the capital needs out there, right? So it's kind of a cocktail of, ingredients, right? Yep. that we look at. But we've, more or less pre-screened, like the markets, right? And so, we know, like today, I'll give you an example, right? Like, so we've started to push further into Florida, right? And so we've been looking at all the Florida markets. We like Florida. It's got its challenges from an insurance perspective and from, some like supply and, rent growth slowed a bit because it was, outrageous, for a period of time. Right. But you look at a market like Jacksonville, right? We would love to buy in Jacksonville. It just has to be priced right. And the reality is there's a lot of supply coming to Jacksonville. Yeah. And so do we have, any, long-term, concerns about Jacksonville? No, right? I think it'll, do well long-term, but short-term, right? Right. It's got its challenges. So if you can underwrite around the challenges, then, I think you can do well, right? And there's times where you can buy in markets where, everybody else is going to shy away from them because of the supply story, right?
Sure.
And so maybe there's an opportunity there. So, you just got to have to roll up, all of the assumptions to understand whether the deal is going to make sense, right? Mm-hmm. So, but we have our market, more or less criteria, and then we start dialing in from there, and we'll make exceptions, as needed, right? Yeah, if the opportunity makes sense.
Sure. As far as source of the deals, of all the stuff you guys close, is mainly broker? Is it referrals from your earlier days? I'm sure largely broker driven, but any secret in the sauce there of source on deals, or just a lot of work, a lot of phone calls, a lot of lunches, a lot of brokers?
It's a lot of relationships, right? Yeah. I mean, I think to me, the sourcing's like twofold, right? It's like you source the deal, right? But then you got to have a relationship somewhere along the way that's going to actually want to transact with you, right? So, you find the best deal in the world, or you get the best broker deal in the world, even if you think it's, the deal of the century, right? Probably somebody else, in the, competitive set that you're competing against that may also, be smart enough or, creative enough to, come up with what your vision is. And being able to, honestly, get the seller to transact with you is the other piece of the pie, right? And so I think for us, because our relationships run wide and deep, we've been able to be winners more than, we probably deserve, because we've had relationships with either the broker or the seller, right? And so they come down to a jump ball, and, we could have a 1,000 unit portfolio, because we've lost every jump ball, right? But I feel like we fight for every one of those jump balls, and we come out on top, more often than maybe we should or deserve to. But, it's like, it's really showing that, hey, we want this deal, we're going to execute, and we've executed really well. We haven't dropped any deals. We've, closed consistently. And so we might be off on pricing a lot. We've offered on over 200 deals this year, right?
You got 7 so far this year?
Yeah, so we'll close 7. 2 will bleed into the beginning of the next year, but that's 7 more than most people. Groups. Yeah, this year. So
I was going to ask about that. So 2 more questions, and then we can kind of dive into a deal story if you want to highlight one. So in 2022, it seemed almost around the Clarion deal, you exited what seemed like 3 deals. Yeah. So Presley, the Avenue in Bixby in Massachusetts seemed like all perfectly timed exits, right? The summer of 22 before things get very turbulent. Good. Just being around the business long enough where you knew this was the right time to sell. Like, how did you evaluate those exits? Because they seemed like they were perfectly timed. And was it to put money or gear money up for the larger acquisition too?
Yeah, I mean, if we were, really geniuses, we would have sold everything, right? And,
that's right.
And started over. I think you get to the point in the space where you're like, you've seen enough, right? Where that, like, listen, we're doing extraordinarily well on these deals if we sell them today, and maybe tomorrow won't be as good, right? And how much better do you think you can do, right?
Sure.
And do you want to be greedy, or do you, is it time to just, make, good, sound, fiduciary, decisions to move on, right? Yeah. And I think, on those deals, we had, executed a business plan, saw, a extraordinary run up in values, right? And it was like
crazy.
Yeah. It's like, can we do any better? Maybe, but maybe just time to move on. And so we, rang the bell on a number of opportunities, and feel, very fortunate, for our investors that, we timed those right.
Yeah, I would say so. The Presley bought at $19 million, sold at $78. I'm sure there's a large value add component there too. That was the 500 unit deal?
Not much, actually.
Really?
Yeah.
Oh, boy.
Yeah. So we did some base building work, replace some roofs and, replace some windows. But, we really planned to hold that, long term, and just, saw a window where it just kind of made sense sense to move on.
That's insane. How do you evaluate like your hold period when you buy a new deal? Like obviously there's probably no magic. Hey, we're going to hold it for 6 years. Everything's market dependent. But do you have an internal trigger of like when it gets to a certain growth where you want to exit, or is it all just kind of like playing sports, like playing the game? You see the opportunity when it comes and you just know. Like how do you evaluate that?
I mean, some of it is feel, right? I mean, I think the way, we always come out with a business plan, right? It's like anything, right?
Of course.
It's like, you got to have a plan.
Absolutely.
And so our majority, and nothing's, set in stone, right? Because every deal is a little bit different, and the buying opportunities are different. Some are a little longer term hold. I'd say the lion's share of what we do is, we look for opportunities like, where there's where we can renovate, reimagine the amenities, improve the physical plant, right? Maybe where, owners owned it for a long time and, there's some things that they just don't want to go back into their pocket to improve. And so, we'll take advantage of those opportunities. And those tend to be just the capital you raise for those value add types deals. They tend to be 3 to 5 year holds, right? Is there a scenario where you execute the business plan, refinance, hold it longer term? Sure, right? Yeah. But that's generally, the equity strategy, right? It's not renovate it and then hold it for 20 years, right? So that's driving a lot of it, right? And the equity drives a lot of it for us.
I think that we've kind of heard a good bit of the story from beginning to end here. I'm curious, like, is there a certain deal you want to highlight? Do you want to talk about the Clarion portfolio you guys worked on 2 years ago too? Just one deal story, anything that sticks out in your mind you want to talk about?
That one's, I don't know if there's a lot to elaborate on. I think the uniqueness of that is, I think when I remember like vividly working on, big portfolios at Greystar, it was kind of an amazing time, and I'm super thankful for it. But I remember like working on one on like coming up on Christmas, right? It was like Christmas Eve, maybe it was probably Christmas Day already. It was like 12:30 at night, and I was getting off a conference call. It was a $1 billion portfolio. Wow! And my father-in-law came out, like I think we were doing early Christmas presents. He was like, "You need to get a new job," and I was like, "Well, I'll start this thing, and I won't be working on these like soul crushing $1 billion portfolios, right?" Sure. And then lo and behold, to be honest, like as we started to get momentum, I was like, okay, we're going to buy like maybe 100, 200. Well, we have, but buy $100 million deal, a $200 million deal, which is like, it's insane, right? Yeah. Like, I come from a pretty, simple, background.
They're massive deals. Yeah.
Yeah. And so I'm like, that's pretty cool. Right. And then next thing you know, you're like, doing one of those. Right. And so, so we're, very lucky for the relationship we have with the Clarion folks. They've been, great partners, great people, culturally compatible, and, really just, excellent, partners, for us. So,
I love it.
But that I'd say, that's not a lot of detail on the deal per se, but
do you have another story that comes to mind?
Well, I would say the Presley deal actually is
let's
kind
go
of,
through it.
and, I don't know which direction you want to go with these, but I think that one's kind of funny because I remember that was our second deal, right? Yep. So it's good second deal for sure. With a result like that, which is essentially like a 10x multiple. Yeah. But Andy, pretty familiar with that product type. It was actually going through a foreclosure out of
really,
at the time, wow. And which is odd, given
it's a 500 unit deal.
Yeah, yeah. And we were early days, right? Every dollar matters. Like, you're going to go travel and see a deal, right? Like, wow. And we found it, and part of having relationships. We had somebody come into the office pitching on us on their debt business, and I think some people go, "Oh, I don't need another mortgage broker," right? We're like, "Hey, well, listen, if you find a deal, we'll kick off a relationship with you." And he was like, "Oh, well, that's great. Nice to meet you." Called, has the deal, right? We're like, say that 500 times, probably get 0 deals, right?
Yeah. And
so called with a deal. We looked at it. I kind of did the Google Street View, and I was like, I don't know, And he's like, no, I think this could be good. I think it's probably, assets probably better quality than.
Who said that?
My business partner.
Or Andy?
Right?
Okay.
Yeah. And so I was like, I don't know. He's like, we should go down and look at it. I was like, looked up flights real quick. I'm like,
where is Presley?
In Charlotte, right?
Okay.
But for whatever reason, we were going to have, because there was a very short fuse on it. Sort of a unique set of circumstances with there was a buyer entity that was buying it, and they had someone passed away in the process, and so they were like falling out of their contract. It was very complicated.
Huh.
And so, but we had a short fuse. Wow. And so we were going to have to assume their position and like basically like, you need to come tour it now. And so I looked up flights. They were $750 each. And I looked at Andy. I was like, I don't know, man. I mean, we should have drove, honestly, because that would probably been the smarter thing to do at the time.
Sure. Because
I was like, I don't know if I'm paying $750
right.
to go down there and then, just be like, this isn't that great.
Yeah.
But we went there and it was, assets pretty nice, right? So we, toured around. We're like, this has got good bones. Like, could use some new roofs and some new windows, but like that's just easy, right?
Yeah, of course.
Easy fix. And and somehow like all the stars aligned and we're able to put the pieces together. But
wow.
it was a economic decision away from not even going to tour it, right? Just because you're a poor entrepreneur that's trying to manage a bleeding bank account, right? And so, but fortunately, that's why it's good to have a partner, right?
How did that purchase price get determined? Was that the existing deal that was? You're saying you were walking into that deal?
Yeah. So
wow.
Yeah.
Interesting.
So we just stepped into the contract, right?
What were the original rents there, and then where did you guys seeing them go? Because it sounds like it had obviously distress to it.
Yeah, I think when we bought it, they were in around $600 to $700, right? And then when we sold it, they were, I want to say there were $1,000 to $1,200-ish. A little rusty on the details.
Yeah, very cool.
Yeah.
In wrapping up, is there the business? Obviously, you've highlighted it there a little, right? You're going from $100 million deals, and even before that, probably lower, to these larger these portfolio deals. The business, you can say, has evolved certainly in that extent. But is there anything else you're focused on now that is different, or like what are you guys focused on now finishing the year? I know you've done 7 deals this year, which is monumental compared to everybody pretty much. What are you guys focused on next year for the business?
Listen, we want to continue to be active, right?
Mm-hmm.
I think, our house view is that, there's like more equity on the sidelines than there traditionally is, which poses problems and makes it easier at the same time, right? So you can find the equity. It's a lot easier to win, right? And it's not very crowded. Mm-hmm. We're going to continue to, beat our heads against the wall to find, good value. So we're, trying to put as many offers out. It's hard to know where the sellers are, right? Because it's, not everybody's getting their dream number right now, right?
Right.
So, but at some point, right, like somebody's going to say, all right, I'm ready to move on, right? Wow. And so we want to be there and be, a solution when those opportunities present themselves. So let's continue to try and outwork everybody. It's really
absolutely.
the goal. Yep.
Is there any service? I guess that would be more on the construction side, but any service for Ironfish or for Blackfin? Is there any market or asset class in the future that you guys don't buy right now that you would want to do? Do you see ever getting away from multifamily or adding or doing development, like ground up at any point?
Never say never.
That's right.
It's not part of our immediate,
yeah.
Like near-term goals. Andy ran and Leslie, our COO, ran a big development shop, right? Yep. So they're, very familiar with it.
Sure.
I just said right now it's extra tough. Like, we were competing with all the development equity before, and it was very attractive to be a developer, right? It's like, well, I can, build at a cost lower than where deals are trading, right? So why would I buy an existing asset? Mm-hmm. And now it's flip-flop, right? So basis has come in. It's hard to get a development deal done. Yeah. And so near term, wouldn't make sense. And I'm not sure, we have the, the nerves, for it, longer term. But,
right.
It's certainly one of those things like, I think every real estate person, likes the idea of like being like, hey, look at my land site, look at it come out of the ground, right? And like it's beautiful, right? I mean, it's it's like art, right? It's fun to watch. It's fun to see it come together. But there's a lot of risk, right?
Tons.
Yep.
Last two questions. Who along this year, right? Or along this career, right? You've been arguably kind of doing real estate deals all the way since school at the tennis clubs where you're evaluating. Maybe you didn't execute on those, right? But did make sense to. But your real estate career starts from then and then all the way till now. Who do you think helped you along the way the most? Was there any mentor that you learned a lot from? Are there any people along the way that, served a critical role in your journey?
Oh, I mean, there's tons, right? Yeah. I mean, I've been, lucky, I look at all those experiences, right? I had a great mentor, while I was at Invesco, right? Who really, helped me on the technical side. I was also worked for a hard charging, acquisition officer there who, was, trying, I think that's a pretty conservative environment, but he was pushing the envelope and, trying to do more creative deals, which, I probably, if I was working on any other team, I would have never seen that, right? And trying to go into up and coming markets and thinking outside the box, right? And charging hard all the time, right? And which is, how I'm wired, right? And so, but it could have been a different environment where I didn't see that. And then, honestly, the Greystar experience was, super unique and very smart people there and good people. And you just learn a lot, from all of them. And so that was great. And then, I think, I mentioned it earlier, but, mentor, came up with this lifeboat concept, right? It was really in the back of my mind. It was like, that made a lot of sense to me, right? And, it was always, in the back of my mind, like, hey, what am I putting in my lifeboat, to, help me maybe do something on my own as I kind of move forward and, try and build that, right? So, I mean, I think, not naming names, but all those people are, very influential in getting me here.
Yeah. I love it. I think that's a great place. I really appreciate it, Doug. It's been a lot of fun. Is there anything about the Blackfin as a whole that we missed, or is there any other things you wanted to share about the company before we wrap up?
No, I mean, I think, I'm very fortunate, right? We have great people here, right? This is not just, appreciate all the questions about my background, but like, we've been very lucky, right? Like, Andy's a phenomenal partner, Forrest's a phenomenal partner, Leslie First, who's, our chief operating officer and partner. I mean, we were very lucky to get her to come on board, right? Wow. She's, extremely strategical and, very, very bright and exceptionally organized, right? And so she really, helped like supercharge us at a time where we needed like structure and organization and like, helping us build the backbone of the company for growth. So all those, and then the list goes on, right? We've had more and more people just continue to join a high caliber, and just, we got a great culture, right? Like we just have good people here, like, beyond, good at their jobs, right? It's just, they're nice, right? Yeah. And it makes it a pleasant place to, work. So by design, but, just that's like the most important thing.
Absolutely. And nice environment. The dogs came right in the office when I got here too. Yes. I love that.
Yeah, they're right at home. Yeah, at least they didn't climb on top of your lap.
That's okay. Doug, I think it's a good place to wrap up. Thanks for coming on. I appreciate it.
Thanks for having me.